Hope you're well. Hope you can hear me loud and clear. Let me just check because last time we didn't have any audio. Audio. It looks like it's working my end. Everything's on. Echo cancellation, noise suppression. Yeah, all good to go. So it's Tuesday. It's the 14th of January. We had a bit of a mixed close on US markets last night. We are looking for the first big data point of the week. Many people not poo-poo, but disregard some of the PPI data. It's obviously less important than perhaps the consumer price index, but it all builds into the story of what the Fed are always looking at. So it all builds into their PCE price index. And remember, producer price index feeds the volatility in there, whether it's rising, falling, better, hotter, or cooler than expected, feeds in to what consumers end up paying eventually at some point. So consumer price index very much the more popular, the more significant, potentially more market moving. But the producer price index feeds into what consumers might ultimately have to pay, so therefore adds potentially or detracts from the expectations around CPI. Obviously, the blockbuster numbers on Friday from non-farm payroll across the board, strong reading. Chatter, as we said yesterday, of people potentially expecting no rate cuts this year. I still find that a little bit of a stretch from one data set. Also, given the amount of volatility we can have during the year, the uncertainty of what Trump will actually implement, less than a week ago now, isn't it? Oh my word! It's like love him or loathe him, he will have an impact, or he's had an impact on markets already, and it will continue. Anyway, see what we go. So let's just run through what we're expecting as far as the data is concerned. The calendar here. Here we are, Tuesday. So this is the data we're looking for in the next 15 minutes or so. I made a note from earlier. So headline 3.4%, month on month 0.3 of 1%, or 0.4 of 1%. About 90% of participants, analysts are expecting between 0.3 and 0.4 and 1%. We've got 0.4 here on the investing.com calendar. The more important, which I haven't actually got on here for some reason, which always annoys me, but there we go, it's calendars for you. The core numbers, much more important, 3.8% for the core and 0.3 of 1% for the monthly number. Evenly split, though, around 0.3 or 0.4 of 1%. So we'll see what the data comes like and see how that moves markets, if indeed it does at all later on. But let's have a quick run through. We're still at 12 minutes. I'm using a different setup today. I've flipped back to my parabolic SAR and MACD with the ATR on it as well. Here, this is the red line here, and the black background. Nobody was saying they preferred the different background, so I'll just the black background is a little bit easier than the white background on my for my eyes, and so there's no moving averages on this one, but this is very much a trend following strategy as well. So the dollar remains dominant. We've been saying this story for a while, haven't we? So here with sterling, we just got up to the daily, big old downtrend, no chance of this reversing anytime soon by the looks of things, but you never know. Parabolic SAR still negative, I've been for 5 days, moving down. The MACD also crossing and then coming in and crossing and moving lower again. So into 121 or under 121 at one point yesterday. Can't see that on here, but we were under 121 at one point yesterday. Up a tad today, we've opened higher, but we're down on the day. So 121's next big support. Sterling, euro, not much better either. We were up yesterday, and we're inching higher this morning. But again, another one that went down to 1 101.75. So we went under 102 yesterday, and it's quite significant, the length of time as well. If I go up to the hourly chart, I haven't actually got a 1 hour or a 102 on here. Put the 102 on there. Sorry, put the 102 line on there. You can see bang about here, wasn't it? 102 here. So it was. Change the color of that. Sorry, it's put it on yellow. There we are. So you can see for 1, 2, 3, 4, 5, 6, 7, 8 hours or so yesterday, we were trading under 102 for the euro. So recovered late in the day as the stock markets sold off, but 102.50 is where we're pivoting through today, ahead of this this key data that's coming out shortly. So CPI tomorrow, I say significantly viewed as more important. It is more important, so a question about that. But PPI again, not one to be ignored. So euro, dollar, pound, dollar, sterling, all in big downtrends. Pound, dollar, yen continues to move to the upside. Again, we just got the hourly chart. Quite a lot of volatility and open this morning. Some chatter around the politics in Japan, but we're still rolling to the upside. Again, on the daily time frame here, we're consolidating at highs, just shy of that 158 area, 157.78 again now. So still remains a bid. Next leg higher will, as we said before, take us to the 160, and then this 35-year high here at 161.80 that we had last summertime. So not a lot the Bank of Japan are saying or doing is helping to improve the performance of their currency. So it had a good day. It's had a few good days, but the trend remains, as you can see here with the parabolic side, trend remains very much to the upside. We come down, but this is the parabolic side, so flattening out. You can see we're consolidating. MACD, K and D lines flattening out as well here. So, but when you consolidate at highs, which we are here, that's generally a positive reaction to what's going on. So let's see what comes of it. If there's any impact on the news. I say indices were mixed yesterday. We had a positive close, 9 points, 5836 for the S&P 500 yesterday. So it was a positive day from the big down day we'd had on Friday following the strong non-farm payrolls. But you can see here again, the MACD, the K and the D line here, crossing back in the 11th of December, much like we've got on our moving averages scenario. A bit of a hiccup with the parabolic SARS, sort of not hiccup, but the volatility. That's the nature of the parabolic SARS. Remember, it's stop and reverse. And so we've had the big movements flipping the SARS, but at the moment we've been short here from all of 2025, basically from the 2nd of January. We flipped to the top, and it's moving lower to the downside. Nasdaq, we had a trade last night, didn't we, on Nasdaq? It came within a smidge of target yesterday, and I'd actually put the target in the wrong place. Although I'd posted 25.85, it was actually filled. It was that target was 25.55, and it didn't actually get filled. If I just take you back to the other set, we see what happened last night. It's just one of those. It's make a copy. I want to load a different layout. It's on. I think I put it on this chart from yesterday. There we are. And the target, if you just got the daily time frame, you can see how close we came to it yesterday. And again, guys, this is I hope you can see that. Let me just move the trade panel. Hope you can see the short was put on an end of day basis on the on Friday, and although this wick here, you can see it's actually gone under the target here. 20.55. The actual target should have been 20,855, but for some reason, finger mistake. You know, these things. That's why and it didn't. It looks like that's been hit, but it hasn't, and it's gone against us since. But it's still open. Stop losses up here still. What did I close? I can't remember where this is on that this demo system. I can't remember where I might have closed it this morning, or it might have been closed this morning. But again, that's looking to go short there, isn't it? On that moving average strategy there for the Nasdaq. Let me just go back to. Should we leave this white set up? It's all right, doesn't it? Actually. Panel. So that's the Nasdaq. I say we had a down day yesterday. The Dow, the DAX. What's the DAX, wasn't it? We were short, and that didn't. Again, there's another one didn't get hit when we closed that one out. The DAX, I should say, the German DAX. Another volatile day yesterday. It's come. It looked like we were going short again. And it's up so far today, but I say not a great deal of things driving the market today. There's not a lot of German or European market moving issues. There's a few speeches later on, Williams, and I think Blaw's speaking as well later on today. But the event of the week is tomorrow with UK and German, UK and US inflation numbers, PPI data. Gold also has come back 2660. So we were running this one down yesterday. If you follow me on Discord, it just kept unwinding yesterday. The gold trade. So it was first slight break of the 20-hour here in early European trades, and we followed through here, and that was a nice confirmation there at the 10 till 11 o'clock, and then by 12 we were under the 50-hour moving average, and we moved all the way down before coming back, and that would have closed out automatically there around about the 22,668 area. So we missed the below 2660 area. However, if we just go to the hour daily time, you see where we've tested yesterday. Here we tested into this 260 area, which has been a previous sort of pivot area around this 2660 area. So we've quite a significant down day yesterday. As you can see, it's engulfed the previous day and a bit. So that's quite a significant negative day. So we are a bit of a retrace today. Obviously, it's still relatively positive. It's just under its 5-day moving average yesterday. But the 20-day now sits at 2649, and the 50-day is at 2640, and that's a negative sort of positive cross here as the 20's gone over the 50. So we're relatively aligned with if that's going to turn back up. But let's see how significant this rather large candle we had yesterday is going forward. As you saw here, we had 3 days and then off we went. So we'll see what happens over the next few days. But a negative day yesterday. Intraday trade was running the end of day trade here. Excuse me. Is still positive from an entry here, and the 8th from this stop out. Actually, no, that would have still been in place going to the upside on gold. So gold, obviously hugely significant resistance at 2,700. Looked like we were going to have a go at it. That was first big retracement yesterday. See how that goes later in the week with the rest of the key data to come. Crypto back over 95, interestingly, yesterday. It was quite a strong day, having had this big leg down yesterday. quite a volatile day. But again, that's what comes with trading a more volatile asset like crypto. But a big test down, big under 92,000, which is key, and a recent new low. So this is I'm going to put this on there at 88,808. So that might come into play at some point as well. Let's make it purple so I can see it. So that's a interesting sort of low zone. It's a low certainly for the year at 81, but it's been bought back today, and it took us not only obviously we closed strongly yesterday. So I'll just go back to come down as time frames. So although we spiked into this sub 89,000, this 88, 800 or whatever I called it was, it turned around quite quickly. And it was clearly buyers there as we went under that 92,000. That's what I wanted to show you. Basically, so 92,000 is still holding. It's quite a significant support zone, and we've been positive through there. That would have been triggered a 4-hour long yesterday at 10 o'clock. And it's followed through, and on the daily, it's looking quite positive. And I've added on this platform here, I added a small long on this today, as this has breached the 4-hour 50 period moving average. So that's a significant move there for Bitcoin. I just want to bring to your attention, and we followed through in the following 4 hours as well. Next resistance is that fib level at 97,600. So it's currently trading at 96,000 or 97,000. So 96, another $700 to the upside before we get to a further resistance zone for crypto today. So or for Bitcoin in particular. So let's just go back to the euro and sterling. Euro still holding up its gains. Let's go back to the got out the 5-minute chart. There we are. Data's clearly out, and it's benefited the euro. So one would assume it's better than expected. Hotter. This is doesn't show me, does it? Naughty platform. It's lost all my savings. Where were we? Monday. Not Monday. It's Tuesday. Here we are. It's weaker than expected. That's very interesting. It's quite significantly weaker than expected. So the annualized numbers come in at 3.5%. The core is flat completely. That's quite a significant miss as well. So let's expect more weakness in CPI tomorrow. Could be expected. These are numbers that are really of interest. Interestingly, the was upgraded a tad, so that's quite a significant miss from expectations, hence the move we saw against the dollar. So core PPI 3% compared to expectations of 3.8%. Basically, I was looking at the analysis spread. It was either 3.8 or 3.7%. Nobody was down at 3.5%. So that's quite a significant miss there for the core number. And the headline number, 3.3%. Again, that was very much 3.4%, or actually that was less so. So that's less of a surprise. But the core number is interesting. So again, weakness in producer price index. So the story of stagflation continues, and still a little bit skeptical for what it's worth. Services inflation, I think still it could be a bit sticky, but we'll see what CPI looks like tomorrow. See how the consumer's holding up, or if he's tailored back in his Christmas spending. I'm saying that's a general vernacular, so excuse me. So hence the move we've got. So euro spiking, sterling might have come back to life. Indeed it has, to the upside. Moving quite nicely there, but here on this, what's this? Is 5 minutes, isn't it? So quite a positive. So we're going to hold that or not. But certainly we had a nice move down, and that's still intact. But that's, it's going to have to move to actually break that moment. Even here on this 5-minute chart, as data is getting us absorbed. More so, the Euro's had a more positive reaction to that data from this 102.40 area we'd got down to today. You see that there on that 5-minute chart. But say not much action, but this is the major data news of the day, and it's sort of lifting the euro a tad. So that looks like a potential, or that is a buy there on that 5-minute there at 102.53 would have been triggered on that on the data. See if that follows through and we can breach back over the 50 period here on this 5-minute short-term trade. Dollar yen, on the other hand, has obviously gone back the other way. But actually has come back quite quickly as well. So the dollar's back up against the yen and the sterling here. It's come back. It's coming back against sterling a bit, but that's certainly the weakest of the week so far. Although we're only on Tuesday, it's, the pressure on sterling remains. Aussie and Kiwi has also been weak to start the week as well, but better there. That's holding. Aussie's holding its data gains from 61.67 low here. Again, just the 5-minute charts, guys, but a break of the 50 period will be nice to see if this is going to continue to the upside before we take any more positions on that. But certainly the euro is benefiting the most. So there we are. So that's long there from 102.53 would have is playing out quite nicely at the moment to the upside on that one. So stocks, I guess, would have reacted a wee bit differently. Stocks also benefiting, and their immediate reaction is to the upside, and crypto, I guess, is also benefiting from a bit of a weaker dollar. Bitcoin, we were just there a minute ago, weren't we? There we are. A bit of a leap on the data there. So dollar's weaker on that, weaker than expect, significantly weaker than expect, I would say. I just did say 3.5% compared to 3.8%. That is a significant miss. And also the core number 0.0 flat completely from 0.3 of 1% in 1 month. That's quite a significant miss. The year-on-year numbers 3.3% from an expected rise to 3.5% from 3%. Again, that's quite significant. And the monthly one coming in at 0.2% is probably even more significant, given that analysts were expecting it either 0.3 or 0.4. Nobody was talking about a 0.2 rise in the monthly headline PPI rate. So that's a weaker inflation for producer prices out of the United States today. So let's see how that all feeds through. Bitcoin's as usual, particularly volatile, coming back on itself. Let's flip back to our actually no, we'll leave these layouts on. So what gold has done. So gold's down. So interestingly here, and you see the volatility in gold in these 5-minute candles. It was initially jumped to the upside, but it's now starting to move back down to the downside and continue to unwind here on the data. The trend had been. Oh, I've lost my link. No, been sort of flattening out, but still sort of couldn't break over the 20 hours so far today, having rallied from late yesterday, this 2660 zone. So whether we're going to test that again today, we're currently at 2663. It looks possible. How it absorbs the data. So not as many comments across the market. We were weak yesterday. It was a very, very weak stock market. We sort of rallied. We sort of edged up into the close, and the S&P finished positive. Nasdaq was just shy of its opening, having closed open much lower, around about 18,800 than the full Nasdaq. And the Dow did end up positive yesterday, up 350 points. to the upside. See how this PPI data affects that. It might give that a further lift today, but very very soft markets at the moment, very fragile. Obviously, pending on what Mr. Trump says or does not say next week, and how quickly they, as I said before, get their policies up and running, and if they're going to be as aggressive as the markets have anticipated. But gold continuing to unwind here on this 10-minute chart as well. So there's a volatility, interestingly, on the 10-minute chart, which 10-minute candle, which is just finished. See the volatility there, but it's biased to the downside, so the dollar's better against gold there. But I think the let's see if the euros come back, because that was the biggest movement. I see it's giving it all its gain. So the not all its gain, sorry, it's given up. Sorry, that's a 10-minute candle, isn't it? Sorry, not a 5-minute. Should we go back to that 5-minute candle? So yeah, no, we're still hanging on to our gain so far for euro 102.55 to the upside. 10-minute is a positive, positive candle. Again, when it triggered some buys there as it broke over its 50 period, even though it's flat. Level, it's not really trending at all, but certainly the sub 102 level yesterday it was attracted some buys, but again not a great deal of movement on that. So we were 102.40, we went as high as 102.70, so it was a 30 pip range on the immediate news breaking, and we're sort of biased to still, depending on the asset, we've got a euro up, sterling up, but less so. Gold, dollar, yen, as they get 10-minute chart again, down and remaining down. So it's a generally weaker dollar, not massively, but generally a weaker dollar on that big surprise for ADP. See how the Aussies come, still hanging on, less so. So Aussie still underperforming, and sterling actually getting back to some of its better moves. So it's still under the cosh though, sterling, both today and in the longer time frame. Dollar CAD, just while we're here, similar sort of moves as you might expect to the other dollar crosses. So let's go up to the trend is still set. Sorry. This consolidation at high continues, still strongly supported by the 20-day moving average at 143.42 now. The 50-day is rising, and 141.80 for the 50-day. So again, another one that's consolidating at highs. Looked like we might have had a sellout here. It didn't happen. We retraced. So watching for a major break on that one, depending on how the oil prices go. Just on the oil prices, obviously lifted from the stories of potential deals between Hamas and Israel over the last couple of days, through $75, through $77, $78 as well yesterday, at 77.75 at the moment. But certainly the breakout we caught here and we've ran with is still very much on our side for the US oil market. But as you can see here very clearly, RSI looking quite significantly overbought here. We went as high as yesterday, went as high as 76. So some profit taken potentially on that. I think I'd caught this a couple of times, pull the stop loss up on this one through that $76 area, or just below $76. See if we can get if there's any more lift in this. We are still in sort of peak winter. It's still big demand. Obviously, the storms are still to come. So we've still got February, or half of January and all of February to come yet. So heating oil certainly should be in demand. But as we spotted these sideways parallels, generally positive moves, we were saying at the time, waiting for the breakout, and the breakout's come. We've rallied that quite nicely. So yeah, stop loss at 76 now for US oil. Nice move on the oil markets. Thank you very much. That's about it, guys. Unless there's anybody got something they want to add or something they want to have a look at, let me know. If not, I'll wrap this up. I've been here half an hour, and let's check. No. So in summary, friends, the core PPI 3.5%. It's a big surprise, big miss. The core monthly number 0.00 1% from 0.3 of 1%. Again, that's a significant miss. So to be aware of these data points. Many people sort of will potentially be interested in these this PPI data compared to tomorrow's CPI data, but we've seen the movement we've had, but that 30-pip move in the euro, not significant, not that significant, but certainly opportunities are available all over the place, my friends. And don't forget, our evaluation, our challenges are open to everyone, whether you're a new trader or looking to an experienced trader looking to leverage a small investment to leverage a much bigger account. So standard two-step challenge at the moment. We, as I said, currently we have a coupon code available that can take you reduce your investment by 15%. So standard $10,000 challenge here, $85. You got 15% off that with the coupon code. Thank you. 15. And pay by however you want to. As I say, the bigger the challenge size, obviously the bigger your initial investment, but the 15% is applicable to all of those. 25 is my favorite. That's, to be honest, $175. 50,000 takes it up to quite a significant up step. So, you know, $300 to get going. But, you know, $350 or even $500 if you want to the big account here, $1,000. It's not a great deal investment if you're going to be trading forex and indices and leveraged funds and stuff. So it gives you a huge opportunity, and hence the popularity of the prop trading platforms. And what we're trying to do here at thePropTrade.com is do things properly. We're a team of grown-ups. We're not the Instagram kids. We're very well funded. We see the opportunities. We also see the potential for growth for all traders, and we're here to help you guys. The appeal to the prop trading platform, for me personally, is the fact that it makes something I've been saying for 20-25 years about people having to have rules and stick to their rules. In the old, you know, CFD brokers, you put your money in, you'd be all over the place. There's no restrictions when you can trade or what you can trade or what the rules are. Here, you know why you've lost, because you've made a big loss. You've had a 10% loss, or you've had a 5% loss on the day. That shouldn't be happening. You know, that shouldn't be happening. And again, you lose your challenge if you do that with the prop trade. But you don't necessarily learn that when you have a CFD account or other type of account, futures account or options account. Here the rules are there, and the opportunity is to trade these practice accounts, but you can, once you've got a funded account, once you've proved it to you and to us, the company, you can get some significant returns. Certainly if you've invested $1,000 for a $200,000 account, that's a serious amount of potential profit you can be coming back to yourself. Remember, they start from 80-20, but go up to 90% of the profits come back to you once you've passed these challenges and you've got your own funded account. You've got to prove yourself. You don't have to prove yourself with other types of brokers. It's a big beauty of the prop trade. So you've got a very small investment relative to the amount of potential opportunities available to you. Anyway, that's the end of the advert. I'll be with you tomorrow again for the CPI. Let me just leave you with the euro. Is it still hanging on to those gains on this short time 10-minute time frame. Sure, it will be. There we are. It's holding again. So dollar still 20 minutes in. It's weakened. So euro 102.40 was our low today, and we're currently trading at 102.47. So again, not a massive amount of pips, but it's if you do it properly, it's enough to do that every day. It's enough to keep you happy, basically, if you keep your risk levels right. So I'll wrap it up for today. Take care, everyone. I'm off to get some lunch, and we'll see you all again tomorrow. All the best, everyone. Ciao. Bye-bye.